your financial wellness. Now, here are your hosts, Don Getling and Gino Fonte.
I'm not sure if your mic's on. We don't actually care to hear from you today, Gino.
They cut you off.
Yeah, no doubt. But luckily, we got Chris here where the real action happens. Today's show is going to be phenomenal. I think Furman's hooking you up.
Oh.
There you are.
Hello. Yes, now I hear myself.
I liked it better before.
Nice.
All right, again, thank you for joining us on the Don and Gino Real Estate and Finance Show. We have an incredible show for you today because one of our favorite guests and the guest that you always want to hear from, because everybody wants to figure out what to do with their money, how to make more money, how to save their money, how to grow their money, and how to someday potentially retire. I know that's a tough word these days.
What's that?
I know, exactly. So we have one of our favorite guests, Chris Ingram with Infinity Wealth Management. He's going to join us today and go over some great stuff, and very timely considering S&P's been reaching new highs. What does that mean to you? What does that mean to your portfolio? Do you have a portfolio?
Should you have a portfolio?
Exactly. So we're going to touch base with Chris. He's always calm, cool, and collected, and we'll give you great sound advice today. So we'd love you to join us by going to donandgino.com. That's the only way you can enter the vault, because there's important stuff here in the vault, valuable stuff in the vault, but you can't get in unless you go to donandgino.com, click on the Listen and Chat Live button, and then you can enter and see our very good-looking guest that actually got us into Afterburn Fitness and made our office lose over 400 pounds now.
Hey, Chris, I could actually partially blame you for helping me lose over 100 pounds, so thank you.
You're welcome.
Yeah.
I'm proud of that.
I know. Isn't it nice to have all this extra space in the the studio now?
I should remember that when I'm just sore all over. Everything hurts every day, but it's a good pain.
I know. Hey, Chris, who would have thought? You warned us about that because we saw you in the gym like a year before us, and you're like, I still get sore. I'm like, shut up. It's been 2 years now, and I had to skip this morning because I was so sore from my double workout yesterday.
And I skipped this morning for the same exact reason.
And
so.
I
So
skipped
you do
this
too?
morning.
Yeah, yeah.
Oh, I feel so much better.
And I skipped this morning for no good reason.
All right, we got some good stuff. Let's start off with what's happening in the markets today. We keep you up to date on a weekly basis and put you in the real know, because what you hear on the media is usually old news, or they don't even know what they're talking about. They're just regurgitating what's ever on the screen in front of them, but we give you what real numbers are and what they mean. We've been pretty much on target for now 3.5 years, now going on 4 years, and we thank you for joining us every week.
Yeah, in fact, as we said, part of it is we're so engulfed in the information. We're constantly studying the information. We're doing a daily video blog, so we have to be super up to the minute on everything we're doing on the National Real Estate Cafe. And one of the things we look at every week is the initial claims. We think it's really important to give us some sort of direction on where the economy is going. We don't just look at 1 week's numbers. We're always looking at trends. And if you watch the National Real Estate Cafe blog, you would have seen that we did a real detailed breakdown of where things had gone, and we had seen a slight trend reversal in the numbers. So
potential trend reversal.
Potential. First indication of a potential trend reversal. And what did it look like today for us,
Well,
Don?
it's funny. They fooled us. We said maybe we'll have a direction today, and it was flat. We were going two different directions. The highs were higher and the lows were higher. So we said, well, maybe today will give us a direction where it's going to maintain a certain direction, and it was exactly pretty much the same as last week.
Yeah, within 1,000
which is
people.
a good number.
I would say that's even within the margin of error. So that'll be adjusted next week for sure.
Yeah, so 298,000 people filed for unemployment, which is a great number. Remember, when we started the show over 3 years ago, those numbers were in the $450,000 person range, and now they're trending right around the 300,000 mark. So that's a good trend, and coincidentally, no coincidence actually at all, the economy's been following in the footsteps of the job market. Without jobs, we don't have a recovery.
Yeah, and it's still not great. We know that a lot of people are still having a hard time, or they're underemployed, or not making the kind of money they wanted to make. And we talked a little bit about wage inflation and how the Fed recognized there's some slack in the market and how we're not going to see any wage inflation until that slack's picked up. So, things are getting better, and they're getting better slowly, which I kind of prefer. That means we can have 3 or 4 or 5 or 7 years of a decent economy instead of boom and bust. Boom and bust is just way too painful.
No doubt about that. And consumer confidence numbers came up, some of the highest numbers we've seen in a while, which means a lot of you are getting a little bit more comfortable with the fact that, A, you'll be able to keep your job, B, you might get a job. So that's good news, and that's going to help the economy feel a little bit more comfortable about spending, and spending equals more jobs. It's funny how that works.
So that being said, Don, you're looking at when we have this much confidence going into fall, and possibly, we'll keep our eye on it, seeing what happens going into the holiday season. But if confidence is this high going into fall and maybe into the holidays, I would expect to see a better real estate market than we saw at the end of last year, and I would expect to see better numbers on all our reports, which means higher interest rates coming soon.
Yeah, so take action, because we actually are already seeing it. Pending homes and sales numbers, boom. Everybody's, we've been warning you. I love this show because we've been warning you. You listen to the media, they started talking about the second housing bubble.
Or the eighth housing bubble, whatever they want to call it.
Yeah, they always make up this stuff, and it's just sensationalism to get you to pay attention. And they were talking about how the housing market is dying and it's going to crash and all this other crazy stuff. And we warned you that it is not. It's just going to become more of a normal market, which is a good thing. I mean, we won't have appreciation levels at 25% anymore. They'll go back down to the normal, 4 to 6% range. And go figure.
I wouldn't mind even if we were in the 3s. 3, 4, 5. That's fine on housing.
Yeah, when we use numbers to gauge the direction of appreciation, we use 3%, and everybody's pretty happy with 3% on $450,000.
Especially when it compounds over the amount of time somebody lives in a home, 5, 7, 10 years. So it's good money.
Yes, as Einstein said, the strongest force in nature is compounding interest. Chris can attest to that, I'm quite sure, huh?
Very true, yes.
You kind of work off that, don't you?
Yes, I do.
And again, that's Chris Ingram with Infinity Wealth Management. We cannot wait to go in depth with some great topics. Chris, you always bring great stuff. We learn stuff from you, which is really cool.
Well, thank you.
Yeah, we were not very smart before we started the show, but now we are.
Your wife doesn't think so.
Yeah. Anyways, to leave her out of this. She knows too much. And so do my 2 friends that are sitting in the booth today. I got 2 of my best friends from high school sitting in, watching in, and checking out the show. Scott, Ron, thanks for joining us. Because very cool. And actually, Ron Gore's brother just got, he's getting his PGA card again this year.
Nice.
Local hero out here. All of you know Jason Gore. Just a bundle of energy. I had the pleasure of growing up with him and his brother. In fact, just texted him yesterday. He's very excited. He killed it last weekend and got second at the last tournament of the year in the Web.com tour. Got 9th out of 25, top 25, get a tour card, and Jason's going back on tour.
Nice.
That's good news. So all the Santa Credians get to watch Jason put it to him this next year. He's playing really good golf and is just a great dude. All right, so let's tee up a little bit. We'll start with that, Gino, on the next one.
Okay.
Because I want to tee everybody up with Chris. What are we going to talk about today? Let's talk about just tee them up with what we're going to go into in depth today.
Yeah, we're going to talk about a couple of different things. You touched on it, I think, briefly. S&P 500 hitting all-time highs, breaking and closing above 2,000, which it's more of a psychological number than anything, but still significant, something to talk about. The other thing we're going to talk about is the high-yield bond market. We saw a lot of volatility in July and August in the high-yield bond market. Why is that happening? What were the results? And
what is it?
What is the high-yield bond market? And what does it mean for you?
All right, we'll be right back with the Don and Gino Real Estate Finance